Welcome back, and joining me for a closer look at what's played out on the market scene today is Phaswane Mphahlele from Makwe Fund Managers. Thank you so much for your time, Phaswane. Lots that is happening in the macroeconomic environment, both from a geopolitical point of view, but also from company news out on the JSE. But really, what has piqued my interest today is the continued strength that we are seeing on the rand, pushing through now just above 17 Rand 30 against the US dollar, even though the resources were under pressure at some point during the course of the day. What is pushing up the local currency?
Afternoon. Well, when we look at the local currency, it's been doing well from a yearly basis or even from a monthly basis. Right now, you're speaking on levels of 1730. That's half the gains of what has happened last month. The rand has a strong momentum behind it. You can look through the lenses of the weaker dollar as potential rate cuts are being pushed through by the market. You can think of the higher commodity prices that are filtering through. Emerging markets such as South Africa are bringing stronger gains, and it's seeing stronger global demand filtering through. The rand is just having a great year, and it's not yet stopping right now because we're looking at the likes of 17 rand in our eye view.
Well, let's look into an economy that does have an influence on the rand, and as you're talking about those commodity prices as well, and that is China. August not looking like a good month. I think about a week or two or so ago, we did see trade data, import and export data disappointing, and then yesterday we got more data points that pointed to a challenging growth environment. Retail sales, industrial output, fixed asset investment, all disappointing and slowing from July. What's your reading of that economy at this point in time?
Looking at the Chinese data, we're looking at an economy that continues to show some stagflationary risks and general slowdown. You're talking of the different data points like we saw today. The industrial production output is down. It's up, but not meeting expectation, along with retail sales telling us the consumer spending is fading. Generally, this is not the first month. This is more of the second month we're seeing of this, and next month it continues. It will be a trend reflecting that, yes, the U.S. economy is going through a route. It's now needing for policymakers to now come and provide some stimulus support. We know they are good at this. They will be making more targeting, focusing on consumers in order to lift the spending and business confidence. So it's about waiting to see the mix of that monetary and fiscal policy stimulus they will feed through to the economy.
All right. We'll talk about business confidence. We saw a lot of investor confidence filtering through to some of the JSE companies today, particularly those that came out with trading updates and results. Let's start off with a short-term insurance provider, and that is OUTsurance. They came out with their year-end results. Company seeing a double-digit increase in its normalized earnings per share, increasing the dividend and even paying out a special dividend. Of course, they've highlighted a substantial runway for organic growth. Valid reaction from investors, as I think at some point we saw a jump in the stock of almost 9%.
Yeah, definitely valid reaction. I mean, the guys increased the rate of ROE. They increased their dividend pay to shareholders, along with that special dividends. And when you just look at their performance as a whole, yes, double-digit improvement. And it's not from only investments because markets are doing well, but we're seeing operational improvements when you think of the claims that are coming down, the growth in the terms of premiums are running high, cost disciplines is taking effect. We're seeing that diversifying their earning base when you look at SA markets with their life insurance. So there's attraction in different spaces that diversified in terms of having been in South Africa and Australia, and helps it to offset the likes of Ireland that is still working its way as they still to meet its targets. So a valid rise of performance. It's an insurance stock with organic growth, so it's a positive for shareholders.
All right. Well, let's take a look at a fishing company, and that is Oceana. They released an 11-month trading update. The company is seeing a lower revenue all the way to the bottom line. That's expected to drop by at least 40%. Is this a softening from a high base, or are there more worrisome trends that we are seeing there?
Well, for the likes of Oceania, it's more of a normalization of their results. We're looking at the prior results, they come from a sky high number. Looking at those fish oil prices, they were high, but they have come down. Supply is recovering, and therefore it's reflected in the taps down by 40%. When you look at those operations, it remains intact. The core businesses are resilient. You're seeing the volume from the likes of Lucky Star is up 1%, showing that there's still stability in demand, whether you look at locally or when they export it. And when you look at the likes of, they're showing some bright stars in terms of hake, that's showing increasing in volume. EU prices are very supportive. So as generally as a company, they're sitting fine. It's just now, it's normalizing, they've reset, and it's now going forward. So it's a good defensive food stock that investors should generally shy away from.
All right. Well, let's get to your stock pick for today. What are you hanging your hat on?
You know, I'm nibbling on something different. Yeah, I'm going with DraftKings. It's an online betting company in the US, and it's got gaming too. The stock has been pulling back for some time. It's pulling back for some time now. It's sitting at a good potential entry point there at $43. The guys right now are being supported. When you look at their financials, they are improving. They are closing their gaps. We're seeing the revenue generation continues to accelerate from an ROC point of view. The guys are sitting with an ability to now go to break even and even scale their business, and they're going to benefit from the likes that it is a growing industry. The industry is even getting policy support where there's been a crackdown on illegal gambling that will see a shift of customers going forward. It's about a timing issue. They are going to benefit from being consumer facing. High beta interest rate cuts that have been priced in will be supportive for such a company. And let's not forget about the seasonal effects. So it's a take a nibble.
All right. Well, thank you so much for that insight on what has moved investors' money today, Phaswane. Really appreciate it. That was Phaswane Mphahlele from Makwe Fund Managers.